The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Now, Tom O'Brien, Darrell Martin, and Steve Rhodes.
Welcome, folks. This is Tom O'Brien. We get Darrell Martin growling and prowling out here with you. We have the Dow Industrials right now up 62. We get NASDAQ up 18. S&Ps are up 9. We get gold down 20. Platinum's off 28. Bonds are down 30 ticks. King dollar is up 718 ticks at 84.44. The euro's off 67. And, folks, if you haven't test drove the Nadex platform yet, this is a great time to come over to the website. Right on the very top, you'll see the banner on the side. You can hit that banner. You can get that account up and going right now. They'll put $25,000 of funny money into it, and we're going to be doing some trades ASAP. Darrell Martin, what's going on?
What's up?
How you doing, man?
Hey, I'm doing great.
Yeah.
This market's been awesome, and we actually just launched something. It's so new we don't even have any tutorials on it yet.
Okay.
But I couldn't wait to get it out there, and I want to show you this.
Okay.
I was talking to you about it. I mentioned it when we were at the show, the show in Boston.
Yes.
But now we have it.
Okay.
And we got a few little tweaks we're going to add in. They'll be done in about a week or so.
Okay.
But I wanted to get some feedback. I already got some really positive feedback. We have a binary scanner for Nadex now.
Okay.
And I know you're like, oh, no.
No, that's all right. Okay, go ahead. Walk me
Okay,
through
well, this is $1. Check this out. Okay, this is how many binaries are open right now. And this is actually a small list. Okay?
And what we're looking at here, folks, if you happen to be in your car driving around the west coast of our beautiful country, I'm looking at it's a setting, and it has, the first setting has the S&P 500, they call it the US 500, US Tech, small caps, all of the above. Then we get the FTSE, then we get natural gas, we get gold, silver, and then you have all the currency pairs. This is pretty cool. Okay, go ahead.
All right, so I go in here, and now, before, you had to flip all around Nadex, and because they have literally thousands of contracts every single day.
Right.
Okay?
Right.
And you'll even have contracts that expire at the same time.
Right.
So, trying to figure out, okay, what do I trade? Where do I find the best one? All that stuff. And so I was like, well, if they expire at the same time, we should be able to look at all of them in the same row, not on 5 different pages.
I'm with you. Right.
And also want to go, what if I want a certain risk-reward ratio, if I don't want to risk a certain amount?
Well, let's set one up right now, because I want to sell the S&Ps right now. The S&Ps,
let's do it.
The S&Ps are at 1650, 750.
Okay.
And you had the spike up, folks, and what's happening, since last January, folks, the market, no doubt, is not paying attention to the dollar. But let me tell you something. This fast move in the dollar is going to throw a jolt into these companies. It's going to throw a jolt into this market because, it's on the C to D leg of a monster ABC up. That will take it to 89. So, this move is fast. This thing is on the road, man. So, you get gold getting whacked, and I suspect that before the day's out, the Dow is trying to get to those highs there, but that S&P is weak. All it's done thus far.
It's been useless the last few days.
No, exactly, and the fast move. Yeah, see, so what we're doing right now. First off, I'll just do this. Well, actually, I'll do this in the future market. So let me just see this. So on a 10-minute. Oh, this is interesting. So put it on 2 days. Okay, so here, this is sweet. Okay, so in a 10-minute, this is what you have. 10-minute, we had the surge up, but yet the surge up. Oh, this is interesting. I almost got to let this test that surge at 59. I do.
It keeps going right back up there, man, over and over again.
Yeah,
so this is like the third or fourth time we've hit this level right here?
1659 is the number. That's the number.
Yeah.
That's where I'd like to sell it, actually. Hold on, let me see. So it hit it there yesterday with, that's 120,000 contracts, and we just hit it with, oh, that's all right, 85,000. It'll hit it again, though. Okay, so let's find a trade that gets me up around that 1659. Okay.
Okay.
I'm ready, yeah.
All right, so what we can do, there's a lot of different strategies you can do on Nadex. It's an insane amount.
Yes.
So we can do the simple buy-sell, all right?
Yeah.
So we can wait till it gets up to 1659. And then, obviously, you're expecting it to drop off after it hits that point one more time today?
Yeah, no, sell it right now for 2 points. Well, this is what happens with Nadex, folks, which is so cool. It doesn't matter. All I need is a box near that top. Do you know what I'm saying?
Okay. Well, let's throw the box on then.
Okay.
So we got the boxes, we got the binaries, we can go whichever way you want to go. We can go neutral, we can go strangle, straddle.
No,
So
I want to
pick
go.
your
I want to
method.
go with the spread. Hurry up!
All
Come
right.
on, come on! It's going down right now.
All right.
Come on, let's go.
There we go. All right. So we're selling right here. I got it pulled up, and let's see, what do we got? If I can get my mouse to scroll. Okay, there we go. And I'm going to add one more in so I can scroll down just for the show. There we go. Okay. So right here, US 500, we can sell you at 1659. We can go in. We can do a at the market one. Do you want to go to end of day?
Yes.
Okay. So end of day. You're not going to get a day right now.
Okay, then give me a 2-hour one. A 11 o'clock one's okay.
11 o'clock one. Oh, wow. Okay. Yeah, we got that easy. You can go in. I mean, you're going to grab a little bit on that. You can grab a 1650 right now for 60. Basically, you can make money down to 1650. That's the 11 o'clock at the money. And you're only going to have 6 ticks to break even, which is half a point because it ticks in dimes.
Yeah, that works.
Okay.
That works.
Now, if you want 3 points to break even, then we got a really nice setup. But anyways, only 6 ticks, half a point to break even. That's going to be your 1650 to 1660 spread.
So,
and that's a $36 risk for a $63 reward, and no fear of being stopped out.
yeah, that works, and that'll get better because right now it's 1657. So, show me the other one too. This is such a cool, folks. This program Darrell has is just amazing because it's one thing, you trading the vehicle, but it's another thing trading the vehicle with the diagnostic piece of software here because it's much quicker.
It makes it so much easier. Okay, so we got a couple different choices. Okay, that we can look at. I'll highlight all of them and actually throw the risk reward graph up here on the top for you.
Yep.
And make that a little bigger too, make it easier to see. And so I can go in here now. This is that's the 11 o'clock one. Okay.
Yes.
It only has to move 8 ticks, which I like that because 11 o'clock obviously is only 50 minutes away.
Right.
So I don't want one that has a larger break-even distance.
Right.
So it's a little bit of time premium in there. Okay.
Yep.
Now, if I go over here and I look at this, and I'm going to pull something up in between the commercial break. It's really cool. I'll show you how it works.
Okay.
But comparing this to CME futures on the S&P.
Yes.
Okay. But right here, we can do the noon. Now it has to move like 3 points. But there's only a $12 risk on the trade.
That works.
And then there's one more that will give you all the way till 4:15. Okay?
Yeah.
There's only an $18 risk on the trade. So that'd be like, if you did 5 of them, I mean, that'd be less than 2 points in the S&P futures. Okay?
Okay.
Now, you're going to be selling at 1653. So when I say break-even distance, and that a lot of times that can be confusing if somebody hasn't traded this before.
Yes.
What that means is, see, like if I can sell it at 1653, the market's at 1657 right now, right?
Right.
So the market basically has to be at 1653 or lower for me to get all my money back. I'll get some of it back if it's in between there.
Right.
But to get all of it back, it needs to be at 1653 or lower.
Right.
So I think, we could easily head back down to that settlement, price, which would be 1648. So that'd be a that'd be a $50 return. I don't know what your target is. But if 1648 was your target, then you'd be looking at a $50 return on a $20 risk by the end of the day.
So let's do the. I expect we're going to close out at about 1650 on the S&P.
1650.
Yeah. Okay,
that'd give you. Now, if you want to use that for a close, then you'd be taking a $20 risk. That, by the way, I'm including exchange fees. Okay.
Yes. Okay.
And because you got to include them, right?
Right. No, absolutely.
End of the day, all your fees you got to add them in. So that's why I add them in on the scanner because I want to know my bottom line.
Right.
So if I'm selling at 1653, I think it's going to hit 1650 by end of day. That's going to give me a $30 return on a $20 risk. So that's 150% return on my trade.
Right.
So that's your trade for end of day. Your trade for right now is the one I mentioned earlier. So, but it's already moving down a little bit off of that one. But we could have got in that one right there at a $20 risk, and now it's moving. So you're calling it. It's going.
It's moving, man.
So this might really be your trade. And sometimes people go that break even distance, but when you have a target, okay. And my target, by the way, is based on I use my deviations.
Right.
So And usually my deviations and your fib levels have some level of confluence within a couple points of each other. They're
Which is
right
really
on,
cool. No, I know, man.
Yeah.
I know. It's amazing. It really is, man.
So if we can get those two pieces together, then, it's a rocket.
And see, where I'm getting the target, folks, is that was a high volume, low bottom yesterday, right at the close. Right at 1550 yesterday. Now, we've already gone up to the highs. It can't handle the highs. It's like, okay, man. And the deviance out here today is pretty intense because we've already had a couple spikes, but this commodity market, folks, is screaming. And let me tell you something. Gold down like this on a Friday is a nasty situation, man. I mean, this market's not going to hold, and it has to do with this dollar, man. I mean, the correlation is so fast on the dollar this morning, it's insane.
And so, I mean, you literally could hop in right now. Okay,
let's do it.
And do you want to do the end of day? You want to do the $20 one end of day, going for $16.50?
Yes.
Okay. That gives us a low risk. It's $100. We do 5 contracts. So you're going to go to your 415 expiration, and it's the 300 point wide ones. Okay.
And what happens here, folks, which is really neat, is that this S&P could actually go up like 15 points, and you're not going to lose any more money.
The
like
whenever you're trying to sell at these highs,
spike
it's scary.
Back down. Exactly.
And I don't have to be scared.
Right.
So. I mean, how many traders right now, you know it, I know it, we've all done it, are going in and shorting at the highs? And they have their stop, like, what, a point or two above, right?
You have to, right. Yeah,
I mean, otherwise you could just get demolished. It can go 20 points up.
No, I'm telling you.
So you can go in, you can do that same trade. You're that contrarian trader. We all love to be that contrarian trader. You can do that same trade right now, but you're like, if you're willing to take a 2-point stop, just do this trade.
Right.
Go right in and put it on. And so that would be the trade I would pick if I was just going to do the outright spreads and my target 1650. It gives me the most time to be right. Remember I talk about 3 things when I do like the presentations when we do them across the country.
Right.
And I say you need high leverage, you need low risk, defined risk, and you need time to be right.
Exactly. And folks, it's any time within that time frame too, by the way, that you get in the money. You know what I mean? You don't have to wait to the end of the day to take your money. This is what's so intense, man. I mean,
you can hop in, hop out now, and one of the things I also teach people on these is now right now you're not going to see a whole lot of P&L if you're like getting one that's out of the money.
Right.
So like we actually have I don't know if you noticed this, but we have an at the money,
okay,
an out of the money, and an in the money.
Look at that.
Okay. So now at the money includes in the money. What that means is if I take it off, you'll see it. The market basically is trading right at where the spread is.
Right.
And see how there's 2 different shades? I don't know how well that shows up on Tiger TV. But
it's showing up really good, yeah.
So that's the live price of the S&P 500 E-mini futures, the June contract, okay?
Yes.
So it shows you where the S&P is in relation to the spread. So if it's in the money, the price is in between the floor and the ceiling of this spread, okay?
Yes.
And we'll go ahead. We'll throw that one on. We just click sell. And by the way, it opens the ticket. Notice that. Working on US 500 ticket. Opens the ticket.
Look at that.
We're ready to rock. We put it in. Place order. Order placed.
You stay right there, folks. Darrell Martin, Tom O'Brien. We're coming right back. We have the Dow right now up 59. Nasdaq up 19. S&P's up 9.5. We're going to be right back.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling out here with us. And, folks, if you haven't opened the account yet at Nadex, come over to our website at TFNN. You can see the banner right in front. You can open the account. They'll put $25,000 of funny money so you can get to understand how the Nadex products work. So we're talking with Darrell right now, and he's got his scanner up. And so now we get the trade, but now let's go back to, I know you're starting telling us what you have with the binaries. Let's go through that so we can see what the new... by the way, Darrell, man, this is amazing what you put together here. It really is, man.
One thing I want to show you, too, this is really cool. Okay?
Yeah.
Because, a lot of people go, well, what's the pricing model? Is it really accurate? I mean, are people messing me over? Like, they get all nervous, right?
Okay.
It's like option pricing models. Okay?
Yes.
And so what I got right here, and this is a perfect example, okay? If I was to sell a spread that has a 1670 ceiling, okay?
A 1670 ceiling, right?
Ceiling, right, exactly. Yeah. So I can't lose any money above 1670.
Yes.
Like any additional money.
No, I'm with you, right.
Risk is capped.
Right.
That would be like buying a 1670 put.
Okay.
Okay?
Yes.
On the S&P E-mini futures.
Right.
Okay? Because obviously your risk is capped.
Right.
And you can't lose any additional money above the 1670, strike.
Yes.
Right?
Yes.
Okay. So how well are they priced? Now, the only day you can really see this is on Friday because CME doesn't have 2-hour and 1-day expirations. They have Friday expirations, right?
Oh, this is cool, man. Okay, cool. Okay.
All right. See what I'm trying to put together?
I see where you're going. Okay, great. Okay.
So let's look at this and let's put the pieces together. Okay. It takes 5 US 500 spreads to equal 1 S&P E-mini future.
Okay.
Because the spreads tick in 0.1. So every dollar is worth $10.
Yes.
Okay. 10 dimes in a dollar.
And E-mini's $50. Exactly. Right.
Exactly. Okay. Now on the S&P E-mini futures, they give you a quote in 1/50th.
Right.
Okay. Because if I buy a put at the 1670 strike for $13.50, I got to buy 50 of them.
Right.
Okay. That's a minimum contract size. Okay. So 1 would be 1 times $13.50. Okay?
Yes.
Does that make sense?
Yes.
So they're priced at that, and I mean, me and you know this. We've done all this, but a lot of people out there, Right. So if I do 13.50, times, 50?
Yes.
Then I'm going to put up $675. That's my minimum trade size, by the way, if I want to trade the CME, E-mini, S&P 500 future puts.
Right.
On the 1670 strike. I got to put up $675.
Okay.
I don't have any other choice.
Right.
Okay? It'd be cheaper just to do the S&P E-mini, but have a stop. So, anyway, so $675. So I'm going to find one that's really, in the money, mirroring the strike. Okay? So, this one's only, see how these two right here, they're only 3 ticks away from break even?
Yes.
So they're you can sell it at 1656.9. Actually, the S&P's at 1657. So, I mean, it's even closer than that. That just has the bid-ask spread in there.
Yes.
So it's really, it's right at the money. Okay? And hence the, or at the market is what I call it. So It says at the market right there. So on that, it's priced right now at, and this, by the way, this is with exchange fees. And I'll even open up the ticket so we can see this ticket right here. Okay.
And what we're doing, folks, is compare. See, you can do this on a Friday because we know what the pricing model is on the options on the futures versus the Nadex model, so you can see what you're paying for the product.
Exactly. And so if I go in here and based on the live price right now, and then just to make it fair, we'll update it 13 times 50. All right, my risk over here is $640 on Nadex.
Right.
My risk on the CME right now?
Yeah.
$650.
Right.
So actually, Nadex is a little better priced.
Right. That's amazing.
Okay. Which is very cool. I mean, see how accurate that is? Because that's 1670, 1670. I'm looking down here, at this strike at the bottom. So right here, the 1670 strike. I should be buying it. So buying it. So right now it's at 1325. So now it's actually even more expensive than it was on this quote.
Right.
So for all you little arbitragers out there, there's something to play with.
Yeah.
So $662.50, $640. Okay, there's a $22 difference on the exact same product.
Right.
They both have defined risk on the way up. So I mean, you can see the play right there. Okay.
That's so neat, man. So yeah, that really.
Okay, so now and I know how theta works, right?
Yes.
It decays faster and faster and faster as you get closer to expiration, right?
Yes.
So what's the cheapest day to buy an option? The day that it's going to expire.
Absolutely.
Right? Because the theta's gone.
Right.
So what happens if you buy... We'll talk about this when we get back. It's really cool. What happens if you actually buy one on Monday and how much premium you save by using Nadex?
You stay right there, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling out here with us. We're going to be coming right back.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling out here with us. Right now, you get the Dow up 65. Nasdaq's up 19. S&Ps are up a 9.5. And that good old S&P, folks, that just went up there and tested that baby, and it can't hack it. It's a beautiful thing. If you want to see what this, what this test is all about, so check it out, folks. So the test is at 1658.59. The first spike was up there at 10 a.m. This spike here is in there with all of 5,800 contracts versus 8,500, and it can't handle it. So it's a beautiful thing. So go ahead, brother.
All right. So here's what we got. And so what we're looking at right here is that's just going into like the comparison of the prices.
Yes.
Okay. And so obviously they're going to fluctuate around a little bit. They're going to be right around each other.
Right.
I mean, just, market demand, different market makers, all that stuff. But it's the same pricing model. And that's the biggest thing I like to show people. It's like it's the same model. Okay?
Yes.
It's Black-Scholes.
Right.
All right. So it's not, rocket science. It's one day. But you know how what happens on Monday, if you go back and you look at this, and we can even pull up your gamma and your delta and everything else.
Okay.
And so this is 7 days out. This is a week away. And we look at the 1670, we're only going to get a 68 delta. So that means for every 1 point move in the underlying market.
Right.
All right. We're only going to get a 0.68 move in the option.
Exactly.
Yeah.
Right.
Whereas if we're closer to, expiration, like today at 4:15, we're getting like a 90-cent move for every $1 move in the underlying market.
And what happens, folks, in the Nadex products is that you can pick your time frame, which is just dynamic. There's no doubt. Right?
Exactly. So you get this massive delta. I mean, imagine these 2-hour ones. I mean, you're getting like, point for point, right? I mean, you're at 100 delta.
Right.
And so you're getting faster movement, which means you're getting more power out of your option. If you want to hedge a position, and we talk about that every once in a while, you can hedge with a lot better protection because the delta's higher.
Yes.
Okay?
Yes.
And the pricing model's the same, and you're not paying for premium that, is going to basically lose money faster because you're paying for more of it by paying for a week of premium versus paying for a day of premium.
Right.
And so you can even go in here. I mean, Thinkorswim has some really cool tools on it, but like one of them is the intrinsic and extrinsic value.
Yes.
In an option. And so I can go over here and notice how both of these, the 1670 and the 1670 here, both of them have a $12, intrinsic premium, like real value.
Right.
All right. So if they expire there, you're going to get that money back. Okay. But the one that expires today has only 25 cents in time value. The one that expires next Friday has $4.50 in time value.
And what we're looking at, folks, if you happen to be in the car, Darrell has the Thinkorswim platform up, and it's extensive coming all the way across, and that's where he's getting all these numbers from, which is really cool. Again, looking at that versus looking at a Nadex product when, the bottom line is that you don't have to give away that kind of bread. That's what it really comes down
Exactly.
to.
So, I mean, would you rather pay 25 cents a day for 5 days?
Right.
Okay.
Yeah.
Or $4.50 for 5 days?
Oh, that's cool. I got
$1.25 or $4.50.
Right.
Which one do you want to pay?
Right.
So people, if you want to know which one's better,
yes,
the one that charges you less extrinsic value is better.
Right.
Because I'm not paying for 5 days of premium, which is going to be substantially larger and going to be like sucked out of the market like crazy every single day.
And that's why, folks, people, if you get, particularly, now that's what a low VIX. If you get a high VIX, folks, that premium goes up even more. And that's why people sell premium, because premium decays every day. I remember Saw Snuff always, he said, man, I want to wake up in the morning knowing that premium is decaying, right? I mean, that's how, that's there's no doubt. Yeah,
and so you can go in here and you see that massive amount of decay and how it works and put it together. But also, and I'm like, wait a minute, $4.50 for a week or $1.25 for a week?
Right.
I instantly know which one's cheaper.
Yes.
And it's going to be the one that expires in a day. I'd rather do the daily every day. And people go, well, I can't trade them for a week. They close at 4:15 and open at 6.
Right.
Okay?
Right.
Yeah, there's an hour and 45 minutes in there. But, I mean, you can roll. So you're paying for the premium either way, right?
Oh, absolutely.
So I'd rather just not pay for the hour and a half of premium. So, I mean, you can still trade these on a longer time frame.
Well, the thing that's even more intriguing, right? So picture what he's saying, folks, okay? Guess what? During that 5-day trade, your money, your trade might come in the money in a big way on the second day. So you're not even, there's no reason to pay for the rest of it either. Right?
Oh, yeah.
You see what I'm
100%.
saying?
And you're not getting the delta.
Right. Right.
So it comes in your way, and you only made 60 cents for every dollar.
Right.
Versus making 90 cents for every dollar.
Right.
And paying more for it, risking more for it, and getting less for it. So if you're trading options, and by the way, we haven't even talked about this simple topic.
Yes.
That's my minimum amount of money I have to put up if I'm going to trade the S&P E-mini future options.
Right.
Okay?
Right.
I can do 1.
Yeah, you don't. That's right. Exactly.
Okay. I can do 2. I can do 10. I can do 50. I can do whatever. Over on the E-mini futures, I can do 50, or I can do 100, or I can do 150.
Right. And that's it, folks. It's by 50 increments. That's the bottom line. Right. Right.
Yeah. And I mean, you can even throw this over here, and we got a lot of stock traders out there, right? So you can throw it over there. We can look at the the weeklies on the markets, and we can. I mean, I can do a whole comparison. Probably won't go into it on this show, but I can do a whole comparison showing you how you're even paying more over on the spider ETFs on the options.
Yes.
And the number one way I can show you're paying more is because you have to buy a whole lot more.
So the key is, folks, get over to the website of TFNN. Open that account. They'll put the $25,000 funny money. And don't forget, Darrell has his own show each and every trading day, 1 to 2 Eastern Standard Time, as he's going through this. So yeah, let's go through the buy. I want to go. Bring me through these binaries. Yeah,
the new tool. Okay.
Yeah, I want to see this new tool.
Okay, well, binaries have a value.
Gold's getting smoked, folks. Here we go. Down 25. Gold's going to go after. This is a nasty day. Fridays are nasty in the gold market. Man, oh, man. Okay, sorry, man. Go ahead.
we got our gold binaries.
Yeah.
There we go. So, okay, you go over here. All binaries are worth $100. Okay?
Yes.
Like maximum value.
Right.
So if your risk is 50, you can make 50. If your risk is 10, you can make 90. If your risk is 40, you can make 60. If your risk is 70, you can make 30. Okay?
Yes.
Like the risk and reward are always going to add up to 100. Once you get that, like you basically got a binary. Okay, you got the basic concept of a binary.
Right.
So, and binaries there's more than one way to play them. Most people bet binaries, they don't trade them.
Okay.
Okay? And by bet them, I mean a binary at its most rudimentary, elementary definition is a true or false statement.
Right.
Okay?
Right.
So if you buy, you're saying true. If you sell, you're saying false. You're saying that if the statement is that gold will be greater than 1368.6, okay, at 12 o'clock Eastern time, the gold futures contract.
Yes.
If you buy that, you're saying true.
Okay.
All right. If you sell it, you're saying it'll be less than or equal to. That's a big key. Or equal to, because false is not greater than, right?
Right.
So I can buy it or I can sell it. Now, if you're in Nadex, you're going to see 21 by 15, and like, what does that mean? Now, you can open the ticket up and you can look at it and figure it out.
Okay.
But that's a pain, especially if you're trying to scan through, all these binaries.
Sure.
There could be a ton of them, okay? And so what I did is I just put the risk reward right there by it. So if you're buying, risk is $20, reward is 70,
that
$77.
Is so cool, man.
And then if you're selling, risk is 85, reward is 13. Now, some people go, why in the world would you sell? That. Well, because it's premium collection at this point, right?
Right.
So if it stays below 1368.6 between now and 1, I'm making a 13% return on my risk.
And right now, folks, it's 1362.70.
Yeah.
So it'd have to go up $6. Never mind just where
and
it
stay
is.
up and
right.
stay up. Okay.
Right.
And by the way, one of the edges in binaries is they're always worth 50, like right at the money.
Okay.
Okay. Like so, when the underlying market is at the same price as the binary,
yes,
the binary is going to be worth $50.
Okay.
So knowing that, I could go, you know what? I don't have to hold it all the way till expiration and lose $83. I could actually get out at 1368 if I wanted to.
Right.
Okay.
Right.
So now there's other ones.
Which would be a 50-50 deal, as you just explained. I got it. Okay.
Yeah.
Right.
Well, and look at this. Like, here's one. This one's $30 risk if it stays below 1365.6.
Okay.
That's still pretty close.
Yep.
Because gold's at 1361.1.
Sure.
But I could go in, put that trade on. If it keeps going down, great. But if it goes up and it hits 65.6, I could get out and take a $20 hit.
Right.
Okay. But if it stays flat, goes up a little bit, but not all the way up to my strike, goes down, I can make money on the trade. If I'm going to get out at 1365.6. Now, if I just held it, then I'd be risking $64. So that'd be, you need to have a pretty good premium collection method. I do premium collection almost every single day. I did 3 of them. Like day before yesterday, I did 2 yesterday. I have one on right now on the S&P. It's premium collection and a range-bound strategy.
Okay.
So I'm doing premium collection almost every day. I love collecting the premium.
Yeah.
So, you don't have to be the people like they want to come in and complain about the premium. I'm like, you can make the premium too. You don't just got to pay it.
Yeah, it's nice being the bookie.
Yeah, exactly. And so I like playing the bookie every day.
Yeah.
So now I usually do it about 15 minutes before expiration. So I'll hop in like this right here. Check this trade out, Tommy. You might even like this one. Take this out. 15 minutes now from expiration.
Okay.
It seems sort of stupid, all right? But you can make $4, $6 right now on this trade if it expires in the next 14 minutes below 1366.
1366.
So it's not a big print. Now that's $4. I'd like a $20 premium usually.
I'm with you.
But if in just the next 14 minutes it'll stay below 1366, you get to keep the premium. Okay. Now the risk is high.
Oh yeah, but it really isn't right now because this is what you have, folks. I got the actual contract up. The contract is under the spike from this morning, which is 1363.30. And you know what? It's a Friday, man. This thing's going to get smoked, folks. Gold's going to be down like $50. It's only down at 25 right now, folks.
So that $10 is yours now. I mean, those things are not even on the table anymore. Like, they're over. You know, so you can go in and hop on like 15 minutes before expiration.
Okay.
And so you can see like how long there is till expiration right here. And now we can take what does the binary scanner do for you? One, it shows you that premium really quick. Okay, you're not doing any math in your head.
Yes.
But two, I can bring this thing way down and only see the last few ones on here.
Okay.
Okay. And we're going to add in, right now we have max risk. I'm actually going to add minimum risk. So that's what's about to go in this column to the left for the whole purpose of premium collection. I want to say, like, I want to risk $80, which sounds, funny on a binary.
Yes.
But because I want to be able to narrow it down and say, show me all the premium collection strategies.
Interesting.
And then we got some people out there that have traded these, bucket shop binaries, which I highly, tell people to stay away from. But let's say somebody has traded them, they like trading them. We added in the feature just to do all the at the markets, all the $50 ones. Okay, so there's like your $50 ones. Basically, it's a 1-to-1 risk-reward ratio trade.
And you call it a bucket shop, a binary?
Well, I don't call these bucket shop binaries, but like the overseas unregulated binaries.
Okay.
What they do is they have just one thing. They have buy or sell at the market now. Market's going to be higher or lower in 15 seconds. I mean, it's just crazy stuff.
Oh,
it's pure gambling.
Yeah.
Yeah. Right. It's ding, 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 ding,
Okay.
And totally unregulated, make money, good luck. I literally have like whole videos on why to avoid them. But anyway, so right here, though, so I could go in here if you thought it was going to be lower or higher. Like, you could sell this one, this 1363.
Yes.
So if you thought it was going to be lower at 130, you could sell this for $42. You'd make 42. You're risking like 48 or 58 on the trade right there. Okay. So that's not a bad trade if you think the market's going down.
Right.
That at the money is actually going to be your massive, largest premium collection with a good risk reward ratio.
Right.
And so there's a lot of ways to play these. It can be overwhelming at first, But what I'm trying to do is go in with this whole series here and basically to show people it doesn't have to be complex. You can find the really good risk rewards. Like I clicked out of the money up here, okay?
Yes.
What this means is really good risk reward trades, okay?
Yeah.
That doesn't mean high probability trades. It means, good risk reward. So further out of the money. So we're going to go down here. We're going to click on sell, see if we can find anything. Okay, so down here we have all of these trades have a greater reward than a risk, okay? And so I can go in, I can say below 1360, risk 40 to make 60.
Right.
Below 1357, risk 28 to make 70. Below 1354,
this is an amazing tool you have here.
Risk 20 to make 80.
So folks, you get the account open, you get the funny money in it, and then you can turn around and you can test drive Darrell's tool here, because you talk about taking the amount of work out of it just to have this in front of you very quickly, man. It's intense.
Yeah. And some people go, they come in, they're like, what's it going to tell me which one? That's usually what people sort of first assume.
It's not going to do that, folks.
It's not going to tell you, like, whether the market's going up or down.
Right.
What it's going to tell you is, if you want to do something, this is going to focus right in on the one that, the one, like, basically your simple choices. Exactly. If you don't do this, then really what you're having to face is you're going in on the Nadex platform, and you're going to go, okay, I want to trade binaries. I want to trade euro dollar. Okay, well, let's see. I got to look at the 12 o'clock ones.
No, that's right. You're going to have to figure
the 11, you got to literally go through all of these, and either you have to know how to do the risk reward in your head, or you got to open every single ticket. And
right.
That's 100-something tickets.
No, it's insane. And not only that, folks, let me tell you something. Even when you know how to do it, okay, it's still, there's no reason to do it because it takes you too long. Like when I pull this up, sometimes it can take a minute and a half, 2 minutes, folks, which, you don't want to take that long. You know what I mean?
Exactly.
And you have to do it because what does happen, just like any other option, folks, you want to get the best option mathematically. And that's what this tool is actually giving you.
Does all the math for you so you can focus on the charts.
Darrell Martin, Tom O'Brien, appreciate you growling and prowling with us out here. You stay right there, folks. We'll come right back. We get the Dow up 62, Nasdaq up 20, S&P's up 9. We're going to be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling out here with us. We get the Dow right now at 52. Nasdaq up 17. S&Ps, folks, are up 750, and we are in the money already on this little trade here, which is a beautiful thing. So the first leg just came down, and on the S&Ps, we got the 415, but this first leg is an interesting one, and the reason being is that what the E-mini just did she's going to be back inside this lower range any second right now. You're at 1655, and she's got some juice coming out of it, which is a beautiful thing, man. So.
Okay, now we have our target. This is probably one of the most important steps. Our target is 1650 for this trade, right?
Yes.
So what we need to do is inside of our open positions, we need to click this little green arrow next to open position.
Right.
And we need to enter our take profit.
Exactly, because you can't make any more money on this trade, folks, underneath that level also.
Well, we could actually make money all the way down to 1625.
Oh, nice. Okay. Well,
so this one can keep making money.
Oh, because that's right. It was a 300-point one. That's right. That's right. Okay.
Exactly. So now we don't have to take profit. We can sit there and babysit it.
Yeah.
Okay.
But put it in. It's better. I'm with you.
So there we go. We're gonna put it in.
Right.
So we're gonna place our order. Now you can go have lunch or whatever.
Exactly.
And hit 1650 while you're at lunch.
Right.
And nice. You had a nice little payout on that trade.
No, totally. Particularly on a Friday afternoon. It's a beautiful thing. And where I was going with the 1650, by the way, folks, if you happen to, is that was a spike. There was a spike low at 1550 yesterday. Okay. So you get a high volume low. So what ends up happening is that what we're looking at is that we were looking at as it was testing the 1659 from yesterday. It was testing it in the futures market with 85,000 contracts versus 120,000 at the top. At the bottom, what's happening is that you get a high volume spike at the bottom. So my take is that it'll make its way down there to at least test that level. So wild, man. And gold is toast, man. This is just intense with gold, man. I mean, gold.
This is beautiful.
Yeah, it's getting
every trade you would have done.
Right.
I mean, we were looking at the binaries earlier,
right?
Like on gold,
right?
And they're all like getting toasted out, man. They're all like flying. Look at these.
Yeah.
I'm going to leave the sell side. This is hilarious. There's nothing. It just doesn't exist.
Exactly.
So they're already like in maximum profit.
Because what happens here, exactly. So it's cool. What Darrell's showing folks, that was taking a premium on the other side. And see what happens on a Friday, particularly in the gold market, it's like who is going to hold, and I'm talking about large banks, folks, large banks, large broker dealers. It's a hot potato because when our market closes, see, when gold goes down on a Friday, it's always dangerous. The reason being is that when our market closes, Australia doesn't open until 6:30 Eastern Standard Time on Sunday night. And gold's a 24-hour market. So what ends up happening is that no one wants to hold this over a weekend when the momentum's going the wrong way. When the momentum's going up, it's a beautiful thing. When the momentum's going down, it's a disaster. And it's particularly a disaster because of the GLDs and the amount of gold that has to be sold just inside the GLD. Now, check this out, folks. This is intense. The GLD right now only holds 1,000 and I think it's 23 metric tons. The GLD, folks, okay, all of 5 months ago had almost 1,400 metric tons, okay? 40% of it's been sold off because of this downdraft so bad. And, they're going to sell more of it this afternoon. They have to sell more of it, So understanding that context is important because as gold moves lower like this, guess what? You have to sell it off, and it's sell it off then. Okay, who wants to hold it? So it's pretty
going
crazy.
Down, and and you can go over here. I mean, there's trades if you think gold's going to keep going down. I mean, you got a 1657 for $40. You got a 1654 for 26, 1651 for 16. So I mean, there's still plenty of room right there. And gold's sitting right now, by the way, at a 1 deviation level on the day.
Listen, folks, you stay right there. We got our man, Mr. Basil Chapman, coming up next. Then we're going to get you healthy with Nico and Paige, 12 to 1. And then our man Darrell's coming right back here, folks. Darrell, you have a great day, safe day. Great job, man, on that software. Huge, man.
All right.
You stay right there, folks. We'll come right back.